Hello everyone and welcome to another Ben and Roman backtesting session for the smart money concept. Let us know if you're here in the chat, if you've been doing backtesting of course, and yeah, how it's all been going. It's been a while for me since I've done a backtest, at least it feels like that. I don't know how many weeks ago it was, but definitely a few weeks. Yeah, and of course I have Roman with me here to guide me through this wonderful backtesting session. Hi Roman, how you doing?
Hello, I'm doing pretty good. How are you?
I'm doing well as well. You all feeling better because you had you were struck with some kind of, what was it, pneumonia or something?
Yeah, something like that.
Ugh.
But yeah, feeling much better now.
Good. Glad to have you back and guide me through this, because the last time I did it, well, I did it without you, didn't I? And it didn't go that great. I mean, it still was profitable, but could have been better.
Yeah, let's see what we can do this time.
What have you got in store for me this time?
And I have the Jupiter.
Jupiter.
So, JUP, USDT. Yeah, also, I don't see a screen.
Oh, let me get that on. And everyone can see my screen now. There you go. Let's move that out of the way. Yep, that's looking fine. So we're at JUP.
Yep. Yeah, so I wanted to backtest the previous month, so June.
So we're going to just start a backtest like that. And we're going to go to June.
Yeah, June 1st.
June 1st. That's nice and easy. Can leave that as is. Create. No data available. Oh, yeah.
And it's 3 minutes.
No, I loaded it on the wrong time frame. Obviously, I forgot to do that, which very soon won't be an issue anymore because we will have the data that far back. June 1st. There you go. Now we don't have the issue. And we're in June 1st. We have, I always like to set the margin or leverage to 10, just so that we have nice things to play with. All right. So, as always, we start with the monthly time frame. And, oh yeah, in case, if you're new, what are we doing here? We are going to backtest, meaning that we're looking back in time to see what the market has previously done, and we're going to apply the smart money concept. Now, if you're unfamiliar with the smart money concept, this is a webinar of a series, so please check all the Tuesday webinars that we've done in the past few months, and you'll be up to speed in no time about the smart money concept and what we're actually doing here. But in the meantime, feel free to watch it because it's fun to watch anyway, and also very informative. You'll learn a lot along the way. So where we start is by checking the highs. So we have a nice target. Oh yeah, you use the trend line, say. I always have to remember to do those so that we actually have the nice drawing template with the target. And yeah, there's something.
Looks like you have some drawings there.
Yeah, I can just delete all that. There was a way to select, yeah, like that. Okay. Yeah, so that's the absolute monthly high, and then we can go to the monthly low right here, which is our other target. So what can we expect the price to move between these two levels on the monthly? Nice and simple.
Yeah, so
what do we see here? We see this fair value gap being filled.
Yeah, so first of all is that we Where's my drawing tools? I don't see that.
Should be in the corner right here. In the bottom left corner.
I don't see that. Well, yeah, so we have the old swing low being swept as well on the left side.
This one, yeah.
Yeah. And after that happened, then you can see that the fair value gap was filled.
So this target was done, and then we have the fair value gap being fulfilled. Yeah. So we can draw that. Like that.
Yeah, I still don't see the way to draw on the screen. I don't have that icon for some reason.
Yeah, I have the annotation here. If you do you not have it in the menu button?
I don't see that.
It's next to the pause button or the share button. Anyway, I'm gonna go to the weekly for now. So yeah, this was the monthly fair value gap. We actually had the it was also on the weekly a fulfill. So right there. And it looks like it broke through it and then went down. So we could see a retest of this target potentially. And then we have some new targets right here. So this.
Yeah, this was like a lot of weeks ago, so it's pretty unlikely to reach this target.
We're not going to see that anytime soon. But just for the sake of explaining to people how you would generally go about this, this would be how. Yeah, we see this fair value gap being filled and then a continuation up. So that's nice. This would have been a nice bullish move up. We didn't get the shift though. It's not a weekly shift.
Yep.
So that's something to remember. So we're still in a bearish, in a bearish setup on the weekly, I would say. Would you agree?
Yeah, totally agree. So I would only add at least one more swing on the weekly, which is closer to the current price. The one that fulfilled fair value gap. Yeah, this one. Probably be no, the lower one on the green candle. Yeah, this one.
Yeah, because that's the fulfill of the fair value gap, so that's always a good target for it to go to. But wouldn't you say the top of this one is as well?
It can be, yeah.
I mean, it's a point of interest, right?
Yeah.
Especially on the lower time frames, you will see probably a better, a better candle that does it. Otherwise, no other fair value gaps I see, so we can move to the daily. So remembering that weekly is kind of bearish. On the daily, from what you can see clearly, this is already a bullish momentum, right? It got this shift. It even got this one right here, where it closed above it. So yeah, we're constantly seeing higher highs. So let's see what the targets are like now. That's a very high target, so I'm actually just gonna drag it down there, and because we're not gonna see that anytime soon. Like so, target there is nice. What am I seeing? This fair value gap was not respected. It was just blown through it. Yeah. Nothing interesting there. This fair value gap, it just dipped in and then made a move. So that's That yeah, because that's what you said, right? So if sometimes it dips in quickly and then price recovers from that. Now, obviously, if you had gotten in this candle, that would have been a stop because it got lower than that. But then this one would have been a good trade. Yeah, towards this target. If the risk-reward ratio was there. Can I draw something now? Yeah, I can see a fair value gap right here. That's a new one.
Yeah, also the one to the left, the bullish fair value gap.
This one.
Yeah, this one. So this would be the inverse fair value gap on daily. So you had this pretty bullish trend on daily, and then you had the weekly fair value gap being fulfilled, followed by the inverse fair value gap on daily. So this can suggest that there might be a reversal, or at least like slowing down the trend.
Yeah. Yeah, we can see this fair value gap just being taken and going. And in the current thing, that this is it, what we have. So we can draw a target here on the daily, and we can draw a target here on the daily as well.
Yeah, could be pretty good target.
And that's a nice target here. All right, and another target. Okay. I'd say that is done on the daily, so we can move over to...
I think we forgot to talk about the expectation from the market on different time frames.
Well, on the weekly, it was bearish, so I would assume still to look for shorts on the weekly, so it's likely that it's going to retest any of these levels on the weekly. On the daily, well, you just mentioned this inverse fair value gap, so that could be an indication of a reversal, but there is no shift to the downside yet.
Yeah.
So daily, it's a little bit more. I agree. I'm not entirely sure yet. 4 hours might be different, but so daily it's kind of bullish still, but on the verge of swapping. So with a weekly bearish sentiment, we would have to see what the 4 hours is doing. And monthly, actually we didn't look at monthly, but monthly, yeah, monthly it's going up. But no clear direction whether it's not enough months to say any good direction, I'd say.
Yeah, but you can see that after sweeping the liquidity from the left side, we had this fair value gap that's been fulfilled and then rejected from there.
Yeah.
So I would say it's still pretty bearish.
Okay. I can see that. Now we get to the magic 4 hour time frame. This is where we trade. This is where we look for our absolute point of interest and entries. So what do I see? I see this fair value gap being fulfilled. Bearish. Oh, it's actually the high time frame. Fair value gap. And we see a bullish fair value gap right here. That has not been touched yet. Bullish. There we go. Yeah, so this fair value gap is looking nice. This was on the daily.
Yeah, that's daily.
Do I see anything else? Oh wait, we can actually enable that. So where are we in terms of market structure itself?
Yeah, maybe you disabled the volume so it's a little less noise.
Oh yeah, we don't need volume. Who cares about volume? That's a different strategy. Yeah. I mean, somehow I'm feeling like, and I have not looked at this chart. I don't know Jupiter, but it looks like it's going to go something like here, retest here, and then go up. Maybe even sweep some liquidity here, so like that. That would be a nice move.
Yeah, so my thoughts on this market would be that, so we have monthly, it is bearish, weekly is bearish, daily is kind of bearish, but in question. And 4 hour
4 hours
is
bearish. We have the
yeah, we have the shift, but I mean in the short term, so you just had this sweep of liquidity on 4 hour. So it might be a short-term reversal, or it might be
you could say that this will be the panic, and this will be the recovery part.
Yeah, I mean, so what I would observe on this market is this daily fair value gap, since we still we have the bearish bias on the higher time frames.
Mm-hmm.
So I think this daily fair value gap is what will tell us where we will go. So we need to observe what happens to the price within this fair value gap, because on 4 hour it can go both ways. It's really hard to tell.
Yeah, and like I mean, what another nice option would be is if it dips in here, then goes in there, and then goes somewhere there.
Mm-hmm. Yeah.
I mean that would be a perfect move. So we would have to see if that actually happens. I don't know.
Yeah. Let's see.
Okay. Let's turn the auto resume off, because otherwise I'm going to go way too fast. And that. Okay. And so what you said before was like if it's like the second candle after fair value gap closes, then there's a high probability that you can enter immediately, because it will continue to do that, right?
Yeah, it is possible, but it's usually what you want to do when you have the order flow. But at this point, there is no order flow yet.
Okay.
So it might be starting at this point, but you cannot say that.
But to be fair, entry is entry, right? If we can find a decent entry, then we could take it, because the risk reward ratio should say that it's good. But okay, well let's just see. We're on the 15 minutes. We're going to look for a possible entry, because normally we would look at 4 hour 4 hour high time frame, 15-minute low time frame. So
yeah, I mean, actually, I cannot draw this. So there is possible way of getting into position here. So you have this sweep of liquidity below on 15-minute.
You mean here?
Yeah, I'm not sure. No. Before that, under the fair value gap. So before the fair value gap was formed. Yeah, this one. So it's swept the liquidity and then created fair value gap. And before the fair value gap, you had the shift. Yeah, I wonder if I can reconnect somehow to get the drawing tool.
Yeah, you can try that.
Yeah, let me try.
Let's see if he gets back. Mm-hmm. Okay, he's back.
Hello. Yeah. I have this tool now. That's weird. Yeah, so I'm in this sweep of liquidity.
Yeah.
So here you had a shift.
Mm-hmm.
And if you switch to the 4 hours, so there was sweep of liquidity here. This one. This sweep of liquidity.
Yeah, sweep of liquidity, fair value gap formed. So this could be an indication of it going up, right?
So yeah, it can be like the short-term order flow to the upside.
Yeah.
You can try that.
So that's why we're looking for a 15-minute shift, which currently shift level is here.
I mean, maybe even like try to enter on this shift and up to the daily fair value gap. I don't know.
Well, yeah, we have to see what the candle does, right? Because right now, like, there's the shift point is still there.
Yeah, yeah.
So now we're getting into new territory. It's still the same. That's not a close. Was that lower? No, that's not lower. So there's still no entry here. Now we get new entry. Which would be there. That's already a lot better. Okay, we're getting that. So now we're getting our entry here. I do see this fair value gap.
Mm-hmm.
So we could,
it can be.
We could even say that we're going to enter here to get a better entry. All right, thank you, Soda. See you later. Thank you for watching so far, and for the thumbs up, of course. So we have our entry, and don't I have? I had a short key. Yeah, just for quick scan, which doesn't really matter. That stop loss there. Now we get into the. Have to see. Well, we are doing 1.5 because it's a fair value gap part. And on the 4 hour, we have to look for our target.
Where's the tiny 4 hour fair value gap?
This one, yeah. Yeah, that will bring us to 3, even to 4. So I think that's a fair point. I mean, we could even split it into 2 just to be a little bit more conservative so that we take this part and this part, and then we should stay, yeah, we should be well above 3. So this should be fine, right?
Yeah.
So then we place our limit order on the shift part. Let's see if we can get a fill. We get a fill and we get... Oh, I was going to say we're going to get stopped out, but no. We're on our way to profit. Not too fast because I don't want to miss any new opportunities. I can switch to 4 hour, right?
Yeah, you can try.
See if we can stop that. Ouchie. That's not fair. That's one. So would it still be in play?
What do you think?
The fair value gap? This is where I struggle. Because right now we could say there's another entry opportunity. Because of this fair value gap.
Yeah, you can switch to 4 hour and see what's going on there.
I mean, it was just like, yeah, it was a full fill here. And then it was a sweep.
Yeah. So what I would say, so we have this daily fair value gap here and this minor 4-hour fair value gap. And before that, we have some liquidity compression.
Mm-hmm.
So this would still be a pretty valid target. It's just the point of finding the entry now. So yeah. Like this whole thing, like it can be the order block.
Yeah, I was just going to say this is whole order block. So if it's the lowest point in the order block not touching the target, then it's a valid entry. Then it's a valid point of interest. So we could look for the entry like there on the fair value gap part.
Yeah, we can try that.
If the price gets there, of course, because if it goes lower now, then we have a better entry point. Because now not only is it not a fair value gap part, it's a full swing or full shift, I should say. We can enter with a larger size, can take more risk.
Mm-hmm.
So we can set the risk to 1%. In case you're wondering, how the hell did you put those orders so quickly in the chart? I have a short key that will set up the position as I want. Okay, so we're going to have to split these again, I think. And that 4-hour fair value gap was somewhere here around the half.
Yeah, it was lower. It was before the middle of the daily fair value gap.
It's there. Does that bring us into 3? That brings us just into 3. So that will be okay then. Then we can place the order. And we don't get our entry. Oh, we do get our entry. And we do get our stop loss. Pots. And we're 0 for 2. But again, we're still in the order block. So you're just going to have to short until you make it work, right? Fake it until you make it. Maybe we get an even better entry opportunity now. Maybe the risk reward is going to be so damn good because that target is going to stay the same. Because why would you change the target now when it's been the target for literally this whole time that we're trying to get to that target? Come on. Yeah, that's a good. Now it's 4.4 just with the first target.
Yeah.
I'm not even gonna split it. I'm just gonna be like that. That's good enough for me. Oh, I'm so anxious. I don't want to play. I'm gonna leave it at here. There we go. That's more like it. You see, it's just about staying in the game long enough so that it finally works. And you may think, oh well, you've just had 2 losses, and now only 1 win. But yeah, yellow, 3% on the portfolio. Thank you very much.
Yeah, that's good. Can you show me the entry again? Because I didn't see where exactly you entered.
Oh, did I go too fast? This was the shift point.
Yeah, so I wouldn't call this a shift, to be honest.
Well, technically, it's the highest candle doing there.
But, I mean, before that, you want to have some low and then some like this, but you didn't have any swing points there. So...
maybe not, but...
I mean, it worked. It's pretty good. But shift would be here, I think. Like the correct shift. Or inverse fair value gap would be
Why is this
here.
Why is this more correct than this one?
Because you didn't have any swing low here.
But you don't have that either. You don't have that here either.
So I mean, this.
Or would you say that this is the swing low?
No, it's not, like it has to be a.
I mean, I don't know if we can go. I don't think we can go. Yeah, maybe 5 minutes. No,
I don't think that's available.
No.
So you want to have like a, what's that? Like candle that is lower. Wait. So one candle that is lower, then some candles that are higher, and then something that sweeps liquidity.
Yeah, but that's
you
not,
just
that's
have
not, that's not here,
constantly.
Right? These are just going down and down and down.
Yeah, that's what I'm saying.
Into the low point. So then the shift would technically be here.
Yeah, like the, how to say that? Like, yeah, the good shift would be there. The one that would provide you a real structure. But the risky shift could be there. So it's different strategies. But also you had the inverse fair value gap here. So this could be your entry point.
Yeah, because this is a terrible entry in terms of...
Yeah.
Yeah. Okay, maybe I was just a bit too premature, but still.
I mean, it worked. And like the general direction and the logic behind it. So can you try to draw it from the inverse fair value gap?
Yeah.
Just to see what the risk reward was.
So, the wait. So the entry
the
would have been here. So the close would have been here. So then we would have had our entry, and the risk reward ratio. Well, let me just get it as tight as I can. 2.5. Yeah, so maybe to here would be, so the split target could have worked as well.
And what if you set the entry to the end of the fair value gap there? So to this side. Yeah, this would be much better. So yeah, it depends on the strategy. So sometimes you want to enter at the beginning of the inverse fair value gap, and sometimes
this would have done this would have given you 3 as well. And it arguably would be a better entry point than maybe my shift. I don't know. Yeah.
I mean, it would make more sense, but I mean, yours worked, so it's fine.
Yeah, we can log it. It works. Did you see that? I made profit. Well, fictional profit. But still, let's continue. So we're entering daily fair value gap territory. So this is dangerous now. Mm-hmm. This is where the danger starts. Let me just drag that a little bit closer. So basically we're going to be looking for a short now, I would say. And hopefully above this line somewhere. Maybe even this fair value gap. That would be sweet, because I don't think currently there's any decent point of interest. Like, well, we have this shift, we could, but that would be, entering on this shift technically possible.
Oh, but this is, you have the daily fair value gap as the point of interest, so 15 minutes is not where you want to enter.
Right. Oh, we have to go to 1 hour then. Right?
Yeah. Well, if you want to enter on 1 hour, then yeah.
I do. But then it would be here on this fair value gap. Yeah. But then the shift would be at the bottom of the fair value gap, right? So it's in reverse. So there. Oh, but we're getting the 4 hour fair value gap, although it's just going through. Doesn't really matter.
Yeah. So what I said is that we need to observe the price behavior within this daily fair value gap to see where it's going. Is it going higher up, or is it going to reverse and go down? This is a pretty important area.
Yeah, so on the hourly, we get the fair value gap here. So if it closes below that, then technically we would have a fair value gap entry on the 1 hour.
Yeah, it's possible.
But yeah. Oh, we're getting a 4 hour fair value gap. That's interesting. Because that could mean that we could...
Yeah, you can try to ride the wave.
Yeah.
If it has any good entries.
This is a perfect order flow thing, right? If it has a good entry, then we could switch back to this one and see if it dips into this territory now, then oh, no, I want that. Yeah, so now we're there, meaning that our first fair value gap shift would be here. And especially with the order flow part.
Yeah, I mean, you can get a nice shift.
Well, this is now the shift, right?
Yeah, this is the shift. This is good.
So this is perfect for a order flow trade.
Yeah.
Because this will give us a nice risk reward ratio, I think. Because if this works and it takes out this liquidity here, which is our first point of interest, really. Yeah, that gives us 3. I'm taking it.
Yeah, that's perfect.
But
well, yeah, let's see.
Okay, we get. And do we takes? We takes. Awesome. I love it. I love it. This is good. That's a textbook trade, I'd say.
Yeah, it is.
This is how we want them. This is exactly how we want. And again, we're now reaching a newer high, so we can still look for that short now. We're in the daily, so we can go back to the 1 hour and now look for... so our shift is technically our entry here. No.
Yeah, I mean, this could be the shift.
I was just going to say, I'm missing it. It's there. So now we have a much better shift on the 1 hour as well. 4 hour short, which looks like if it's going to get to there, that's... Come on. I didn't expect it to enter so soon. But the risk reward ratio needs to be there, of course. Now, obviously, this is on the daily time frame now. So this means that the trade will take longer. I see.
Yeah, you can also increase the risk if you want on daily, since daily is higher time frame than 15-minute for entry. Or I mean, 1 hour compared to 15-minute.
So what would the risk? What would the risk normally be if you do like that? Like 2, 3?
I mean, it depends. Like every trader has its own rules, but it can be 2.
Let's go for 2 then. Ooh, that loss is gonna be nasty, but it's we're getting into different territory for me now. 2% risk. I've not done that yet. All right. Yeah, I'm placing it. Let's go. Okay, we get our entry. We could have
probably got fulfilled on 1 hour. That also pretty good and had a nice reaction.
Yeah. Technically, we could have even looked for a hedging position. Entering in the fair value gap.
I mean, it is tricky because you already have the shift on 1 hour on higher time frame combination. So It can be tricky with 4 hour, but yeah, you can try this one.
Well,
also,
I missed it. The
yeah, this one, the lower point.
The shift would be here, so we could set it up like, okay, we missed the trade. We can see if we had gotten it, what it would have done. 2.4, not high enough. Maybe the top of the fair value. Yeah, that's fine. So the top of the fair value.
You can also lower the entry to the bottom of the fair value gap.
Oh yeah, that's true. We would have gotten that as well. And then our conservative, yeah, that's, yeah. So this would have been a good hedge. Oh.
Yeah. So what I would do this right now in this area, since we have this huge daily fair value gap, we already have this 1 hour shift. It was even close, right? Oh, it's 15 minutes. Yeah, so here we had the 1 hour shift. We need to observe the price action within this area. So you can also switch to 4 hour and see what's going on there with the candles. So
yeah, so we see this.
You can see
this taken.
I mean, this huge engulfing candle tells you a lot about the reaction within daily fair value gap.
Yeah. You could see it as a big rejection of the daily fair value gap for sure.
And so that's just another confirmation, like another point into the bearish ideas.
Yeah.
So yeah.
Okay, so this hedge would have been a stop.
Yeah.
That would have been a stop. This fair value gap is done because it's already been taken here. Anything else on the 4 hour? Well, maybe some liquidity, but it's bearish. So
Also, since it is bearish, maybe there are like more targets down if you switch to higher time frame. Is there anything else to the left?
Yeah, there is.
Oh yeah, you have this one.
So we can see here.
Yeah, so it's up to you. Maybe you want to split your targets and set the one lower.
What is it? Okay. Yeah, could do that. But I'm gonna get out with more because we're risking a lot more.
That's a good idea.
Yeah, and what we can also do is look for order flow. If it hits this fair value gap, or maybe even this fair value gap on the 4 hour. Yeah. So we could look for another short in the same direction. Well, okay. Maybe not. Oh, there was one. I can't.
Yeah, you wouldn't see this one without the indicator.
No, it's too tiny. Too tiny. Hello. Hello.
Oh, okay.
You don't even have time. Where are we at? 14. Come on.
Not bad.
Yep. Okay, so let's change a few things. So we have this now. This is now a target that has been checked off. Wow, what a beautiful trade.
Yeah, and was there an entry in this small fair value gap?
What, this one?
No, I think there was something else.
This one? No, because this is the fair value gap, and the entry is not in here.
The one?
And we have no, we have fair value gap. This is the fair value gap, so no entry here. No, no entries.
Yeah, I think there was something. no, there was no entry. Yeah, never mind.
No, because this is what formed the fair value gap.
Yeah.
Nope. And the same here. And the same here. So
I mean, right here there was this micro fair value gap.
Oh yeah. Yeah. If you got that, but I mean,
yeah, there was no entry. There was no retracement.
There would have been here somewhere. There was entry, but
I mean,
oh wait,
there was no shift, so there would be fair value gap here, and price just wouldn't come back to this
so
one.
you don't have the entry here. Yeah. Okay. Let's go back to the daily because we've done so much that this is now also checked. So we have one target left on the bearish side, and I'm saying that the daily time frame is now also looking bearish.
Yeah, you can see the shift.
Yeah, there's a shift there. But this is this is the change of character, actually.
Yeah, it doesn't be the change of character.
So yeah, definitely bearish. Well, weekly was already bearish, so that would not have changed it. 4 hours also bearish now. So we're bearish across the board. So we're looking for nice shorts towards this target. That's a massive target. The first massive target. We could even see a retouch of this, but that's, well, we just have to see what that does. Okay, we have time for a few more, I think, or a few more candles.
Yeah. Let's see what we can have.
So we get our fair value gap, and the fair value gap was formed on that. So we're now in the fair value gap, so we can already look for the short. Now we have to change our mindset to look for swing lows like that. Any fair value gap? Maybe here. There. But then it might even be worth it to just wait until this one fills and you can get into the position with more size. Or what we could also do is just wait and see if we get something better.
Yep.
Which technically, yes, right? Although you wouldn't classify this one, right? Like I'm seeing this candle here. It's very tiny.
Yeah, I wouldn't say this.
Although it worked out perfectly fine last time, Roman.
I mean,
I'm just saying.
It's up to
you. It would be there.
You can go for it.
I'm going for it. I'm liking this entry. And I'm up 14%. I deserve a little bit of risk. Is that? No, that's wrong, really, isn't it?
What do you mean?
As in, like, where I'm trying to find entries just to make some money, but holy moly, that's a stretch. Is there nothing in between? Yeah, there are some fair value gaps, but they don't really count, do they? Because they're so old.
Yeah, so one concern I would have at this point is that after taking out this liquidity, we don't know, like, is it going to just bounce out of the closest fair value gap and go down? Or, like, it took some liquidity, so it might need some time to recharge to continue going down.
So you're saying that maybe wait until we get at least. Well, I mean, what I don't like about this is that we have this. This is way too far for a 4 hour, 15-minute time frame. Like 6 is nice, but it's crazy. Like we're looking for the 3, and currently we can't find the 3 unless we're using some very old fair value gaps. So in this case, the entry is there, but the risk reward ratio is not. So then we should skip it.
Yeah. So I mean, at this point, when you just had the sudden move down, and you just entering the fair value gap, it still makes sense to try to ride the wave, as we said before. So try to go down. But yeah, we don't have any targets close enough.
Yeah, so we need to look for something that will give us more confidence in the move. Otherwise, we just have to blindly set it to 3x risk reward. But you know, that feels like a stretch. Okay, so
yeah, so we do have some kind of a consolidation in this area.
Yeah. Plus, also, it would have been a stop loss. No.
Yeah.
And now we do get some kind of entry. So now we have that halfway of the fair value gap filled as well, which is always a good indication, right? To say, okay, so it's half filled at least.
Yeah.
Do we get a close? So the close is actually on this candle right here. So we're not there yet. But again, I'm not sure if we can. So the same rules apply. I don't think with this we can get the risk reward ratio that we want, because this is the only target that we can focus on right now.
And if you set it again to the beginning of the fair value gap, so try this one.
Oh wait, it's 0.5% because we're doing a fair value gap entry. 2.7. Maybe if I put the stop
maybe try
a little tighter. Okay, so technically rounding error. I would say we can go.
We can take profit slightly lower as well to get the 3.
Yeah, it's fair. Okay, I think we can scrape it. It is scraping the barrel.
If this works. Yeah, it can work like that.
I'm just checking, by the way, for another entry, because this just entered the fair value gap, so we would get a new shift there. Let me just remove this one.
No, like the targets are too close.
Yeah, but maybe not if it's this one. So if it breaches that, and then we can get our entry on that one, then it's okay, I think. Because the stop loss is a lot closer then. Like, so what I'm saying is, no, that.
Yeah, I get what you mean. Yeah, this would be 3.
Yeah, it is. So we could set it up. I mean, if it's not going to get it, it's not going to get it. No, we're going to get stopped anyway.
Yeah, who cares about money? Like, you have, what, 200% profit?
Yeah, and it's the closing, so we're
We're
going to end it at a loss. Oh no! Spoke too soon.
Oh, so basically you have the range here now.
Yeah, true.
With the deviation on this side, and then.
Okay, so we're still ending it on profit. That's holy moly.
Well, let's look for the range trade now.
No, it's the end of the live stream now. We're gonna do we're gonna do a recap. Don't be greedy. We've got enough.
Come on. It's the first time I spotted the range.
Okay, we'll do the range trade. We have a few more minutes left. It's okay. So what is the range trade?
Yeah, so you have this range. You can draw it with, I don't know, with rectangle or with Fibonacci if you want.
Just use some tools. Oh, Fibonacci?
Yeah, you can do it like that.
Like this?
Yeah, I mean, it's good enough. So you have the range where price is consolidating, and you have the deviation on one side. So price took liquidity on this side. And what theory says is that price is very likely to then take out liquidity from the other side.
Yeah, so this one.
Yeah, so
let me just let's just disable this one so that it's even more clear. So where do we enter?
Yeah, let's see. Switch to 15-minute and see if there is a shift.
Okay, so this one, and so this one. Okay, there is no entry then.
There is a shift. I mean,
yeah, there is a.
Let's see.
The shift is here, but it's on this candle, and there's no entry here.
But
I can set it up.
It might return. Yeah, let's see. It's literally the first time that I noticed the range like this.
And then you say it's really going to go there, right? So we don't even need to look for a risk-reward ratio. This is just going to be, is it a 1% trade or is it a 0.5%?
It's the shift, so yeah, you can use one.
All right. Well, there we go. Our first range trade.
Yeah, you could send this paper money to me if you win.
Yep, I will. Let's just switch to the 4-hour because we're not going to look for any in between. The range trade. Uh-oh. Uh-oh. Oh my God. What a monster.
Yeah.
21%. It's a long period though. Well, we had a few trades for a long time, of course. That's 2 months almost. We're basically at the
no.
Oh no, it's 9.
It's today.
Yeah. Oh right. Yeah. No. Yeah. I see. It's 10 days.
So it was just 10 days.
Oh my God. Maybe we need to swap these around because this is confusing.
Yeah.
Or maybe I don't know. Something's confusing here. Maybe you need to. Yeah. I don't know. But damn, that's a 62% win rate in this case. Wow.
Yeah, that's very impressive. And you managed well switching between longs and shorts.
Yeah, I'm starting to get the hang of it when to look for longs and when to look for shorts. And it's a good thing, like what you said about that and then you get the recovery. So you get the panic move and then the recovery and then another panic move and then in this case you get some accumulation. With our very first range trade. Oh my God.
Yeah. So what I was saying is that here you had some liquidity taken and then it was the correction. Then again, you had this liquidity taken and now it's correction. So it will probably go somewhere within this area and who knows, maybe it will go down.
Yeah. Yeah. Awesome.
And there is fair value gap, which is around 50% OTE. So yeah, that would be the target. But yeah, unfortunately, we'll need to stop.
Yeah. Oh, it's been a good backtesting session. If you're wondering, can I do this backtesting as well? Yes, you can. You can sign up for Altrady, get a free account, and do some backtesting. No problem. It's a very handy tool to test your strategies for manual trading. As you can see, in an hour time, we've done market analysis. We've done how many trades? 8 positions.
Yeah.
In an hour, and we made 21% profit on the portfolio crazy. If we did it right. Yeah. That's not bad. And that's basically with if you had done this, right? So let me just recap what you needed for this. You need to have $10,000. Now I understand not everyone has $10,000 that they're willing to lose in futures trading. Understand that. But if you did have that, then in 10 days, $2,000, that's $200 a day. And very little effort required in this case because you don't trade every single day. That's a nice side hustle. Very nice side hustle.
Yeah. Yeah. What we need to do next time is to also check for the time of the trade, because sometimes if it's during the nighttime, you wouldn't be able to enter it.
Yeah.
Yeah. When you do more realistic backtesting, then you'll check less.
Even add like an indicator to say my trading times.
Yeah. Yeah. It can be like that.
Yeah, so that you can indicate when your trading time is, like if you're in the zone or not. Yeah, we could do that.
Yeah, that's a good idea.
All right, everyone. On that note, I'm gonna thank you all for watching. Please leave that like. It really, truly, truly, truly helps us to evolve this channel. We've gone so far. We're close to 6,000 subscribers now. Obviously, we want to go to the 10,000 subscribers first. But we can't get there unless we hit the 6,000. So please, if you haven't done so, subscribe, and like. All right, we'll see you again tomorrow with a market update from Roman.
Yeah.
Yeah, it's going to be a smart money market update. So we're looking at the current markets tomorrow and see how they are doing. And yeah, then again, thank you all for watching. Thank you, Roman, for supporting me. I couldn't have done 21% without your help. So
thank you too. It was a really nice backtest.
Yeah, we need to allocate some money. Let's put 10,000 in our joint futures account and start trading together.
Yeah, we can try that.
All right, Roman. Thank you. And all right, everyone on the channel. See you tomorrow. Bye-bye.
Bye-bye.